BHP and Anglo American continue to stir conversations about the outflow of capital in South Africa's mining sector. This comes as BHP offered a now rejected takeover bid of Anglo American that excludes its main South African assets. And joining me now to unpack these developments in greater detail is mining analyst Peter Major. Thank you so much for your time, Peter. Really just wanted to kind of get a framework of the capital outflow that we have seen in the mining sector, I guess, over the last few decades. And really, I want to start off, with us getting on the same plane. What have been the main headwinds that have triggered the structural decline in mining investment and mining companies, divesting out of South African operations? Is what we're seeing now basically a thing that has just been escalating?
What was the last word you said? Everything else I heard really clear.
Yeah. So I was just wondering, the headwinds that we are seeing now in the mining industry, are we just at, the peak or maybe close to the peak of the challenges that we have seen in the last few decades?
Well, we all want to pray that this is the peak of the challenges. But when we look at the causes of the challenges, they're not going away. So unfortunately, these may not be the peak. And it's important to differentiate. There's challenges in South African mining that aren't being faced by our competitors in the other countries.
Okay.
In other words, our poor miners are battling a lot more than their competition. And we know what happens in a capitalistic world. The weak die off and the strong dominate. The strong get stronger. And we had an environment that was very conducive to mining here for over 100 years. But starting in the 80s and the 90s, the environment started turning very sour for mining. Huge labor strife, huge community strife. And then a new government radically changed the legislation, and they nationalized the mines. They took away all the minerals that all the mining companies had built up over 100 years, and they said, you are now going to lease those minerals from us. Those billions of dollars of capital you put in are worth nothing without the minerals. So that's what really triggered an exodus of our mining capital. So now when mining companies here made money, they said, let's send the dividends overseas and build up a mine in an area that's much more conducive to mining.
Peter, we're all trying to also pinpoint where the responsibility lies. Does it lie with government mainly? And I'm wondering, this current government that we have had here in the last 30 years into democracy, if maybe the responsibility to turn things around lied with them, or maybe if the miners also had some sense of responsibility, or they could have had some sense of responsibility in turning the situation around.
Look, the bottom line of mining is it takes a lot of money. And from the first time that farmers' children found a diamond in the Free State Kimberley area in 1868, that diamond was worth nothing. But when they sent it overseas, it brought in a lot of money. And then the people that came to dig for more diamonds, they had to get money from overseas to dig. Cecil Rhodes was able to organize a lot of money from overseas, Barney Bonato. Without those men bringing in money, without Ernest Oppenheimer going all over the world during World War I, he had to bring in money to mine. So if we don't have money coming in, we can't mine. So government has to create an environment that sucks that money in, that attracts it in. Because right now, government's just created an environment that pushes money out, that blocks it from coming in, and that scares money from coming in. So government can do everything to change this. They have to want the money to come in, and they have to go out like the other 210 countries. They're out there trying to seduce investors, trying to bring that money in here, not chase it away.
Indeed, and of course, one of the challenges that you also mentioned was, the labor strikes, and we know that there have been times when those labor strikes have actually caused paralysis in some pockets of the industry. And I'm wondering if, we've learned from that in any way, and particularly the mining sector in terms of how they deal with labor on that front?
I'm glad you brought that up because that is a real improvement. Yes, we have peaked with our labor difficulties. I think we probably peaked just before COVID.
Okay.
And without a doubt, I think everybody in this country will argue positively that the worst of our labor difficulties do seem to be behind us. Gee, we're now settling 5-year agreements pretty much in line with inflation. Those are nice agreements for both sides. You know, a 5-year ironclad agreement so both sides can go out there and borrow money on it, can sink shafts. That I would say labor set an example for government. If government could do what our unions have done with the mining companies, how the two have worked together, mining companies and labor, that's an excellent example that will really benefit us if we want to improve this. Government can learn from that.
Yeah. Well, Peter, I mean, it's also quite interesting that you mentioned that we are less competitive than other jurisdictions, and particularly even zooming into cost competitiveness, seeming that, of course, as you've seen even with Anglo American platinum, that when the commodity price cycle is depressed, when we still have those high input costs, there isn't a lot of profitability coming in, and we are more vulnerable to those shocks. And talking about Amplats, yeah, Peter, you can go on.
No, you're very right. A miner needs to control his costs because he can't control his revenue.
Yeah.
Not very much. You know, he can't control the metal price. He can control the grade. He can control the tonnage, although that's dependent a lot on electricity and transport. So miners can control their costs. And working with a union, you know, if we want to make the men more productive, if we want to upskill them. So if they are very good at operating an underground handheld drill rig, let's upscale them. So if we have an ore body that requires the use of large machines, that they can run those large machines, you know, the rubber tire. And costs are so important. And we dominated the world in that we had low cost electricity. We had low cost efficient railroads. We had beautiful highways. South Africa's blessed with pretty good weather and pretty good, if you imagine our highways going through the Karoo, can you imagine if you were in Russia and you had a highway going through the tundra, and in the wintertime you had 10 feet of snow, 30 below zero, or some of these countries that have minerals in South America, the mountains, you know, they have to mine at 14,000 feet. People can't even hardly breathe up there. The machines can't hardly breathe up there. So that's our cost advantage. And we always should be in the lowest cost quartile, maybe the lowest cost decile. Then we will always have full employment and full production, even when the metal prices go down.
Yeah. Peter, of course, as we're talking about Amplats, there's also a lot of attention really being put onto the BHP takeover bid for Anglo American. Of course, they revised the initial offer and they rejected the initial offer and also the revised offer. And of course, there have been a lot of comments coming from government officials that BHP wanting Anglo American without its South African assets is putting a cloud on the mining sector. Do you think that this could be a wake-up call for the ruling party ahead of the elections?
Yeah, I really do. And we've said in previous interviews the last couple of weeks how Anglos has a lot of cards they can play. They might be the prey, but they are a prey with a lot of tricks up their sleeves, a lot of tools in their toolbox. And now we're seeing what some of those are. Because essentially what Anglos is saying is, all right, we've looked at BHP. Here's an outsider who doesn't know us that well. He says, I'm going to come up. I'm going to make your share worth a lot more. I'm going to break off some chunks. I'm going to rev up and invest in some other chunks. So Anglos has come back today and they said, well, we can do that. You know, you're not doing anything we can't do. And look, we've been working on this plan all over. You have made us speed up our plan because you've brought it to everyone's attention. But here, we're showing the world this is our plan. If you just give us a little bit of time, we can increase our value a lot more than an outsider who doesn't know us and he doesn't have the history or the passion or the link with South Africa. So I think Anglos can pull this off. And I think it's given government a second chance to show they want to encourage mining. Because if Anglo's works with our government, they can increase their value a lot more than an outsider can who says, I'll just throw away the South African parts. I don't need to consult with government.
Yeah, and at least also we can see a silver lining with Anglo American saying that it will keep Kumba iron ore, maybe signaling that not all
yes, 100%.
Lost. Yeah,
100%.
Well, thank you so much for your time and for your insights there, Peter. Really appreciate it. That was mining analyst Peter Major.